Today we're going to be looking at fair value gaps, and now we're getting more into the entries and entry model and entry criteria sort of stage. We've covered everything else in the previous episode, so make sure to check that out. But today's going to be fair value gaps, very important because it's literally an entry criteria and one of the most powerful entry criteria too. So whenever you see like a break of structure and you see a fair value gap too, it's always high probability showing displacement, which we'll cover in this video. So smash the like button, let's spread this around, help loads of new traders, and without further ado, let's get into this video. So what is a fair value gap? So I'm just gonna keep it simple with you guys. I don't want to complicate anything with you because I actually believe that trading, the more simple it is, the better it is to follow, right? If you have so many lines and everything going around, this just gets complicated. I've been there personally, and you just get, analysis paralysis, as they say. So I'm going to keep it very simple, but simple does not mean easy, so don't get confused with that. But a fair value gap basically is a 3-candle pattern. So we have, okay, since it's green, okay, we have basically 3 candles, okay? It consists of a 3-candle pattern. And all it's saying is, it's a gap where there is market inefficiency, where there is some price imbalance. Now, these are all fancy words here and there. What does it actually mean? So I'm going to draw it out. So this is like a normal 3-candle pattern you'll see anywhere in price. But the gap is actually between candle 1 and candle 3. So if I can actually, yeah, I'll just do it there. Candle 1, candle 2, and candle, okay then, candle 3. So these are the 3 candles. Now, when this candle finished and it was closed, this candle energetically, properly, like with more momentum, went and pushed up to the upside and then closed. And then this next candle came and did the same thing and closed. So what we are actually left with is a price inefficiency because price went so aggressively to the upside that there was no sell side delivered, right? So if we actually add some wicks to this example, something like that and something like this, right? So in this scenario, in this candle, buy side was delivered. Okay, we went to the upside. In this candle, sell side was delivered. But between this candle's low right here and this candle's high, what was this gap? There's nothing. There was nothing delivered. No sell side was delivered right there. So that becomes our fair value gap. And we basically draw it like this. From this candle's high in a bullish scenario, this candle's high and this candle's low. We just connect those right there. And then I'll just make this a different color. Something like that. Ignore the SD thing, but this is essentially a fair value gap. But why is it important, you might be asking? We basically expect price to come back to fill in this void imbalance. You've heard these words floating around, and then we go up and just carry on to the upside, whatever trend it is. Okay, and if a little extra tip is that sometimes we actually tap into the 50% range of this area. So the whole fair value gap, we usually tend to tap into exactly this area before going up. But to keep things simple, just enter here at the fair value gap at the top. That will be your entry, your stop loss above the first candle or below the first candle, and take profit. That's up to you. Now, in a bearish scenario, all we're going to be doing is changing the chart colors. No, I'm joking. In a bearish scenario, this is how it will look. Something like this: a 3-candle pattern, right? First candle, second candle, third candle. And between the first and third, there is a gap. This gap, okay? The low of this and the high of this. So our fair value gap will be drawn just like that. That'll be a bearish fair value gap, and as usual, you'd expect it to come here, tap, and then carry on to the downside. But note that it doesn't always have to happen. Nothing in the markets always has to happen. We're just giving ourselves the highest chance and the highest probability of something playing out, but it doesn't mean that it's guaranteed. Nothing's guaranteed. Furthermore, it's not always going to respect the fair value gap. It can even go up and, carry on to the upside, basically taking your stop loss. So nothing set in stone. It's just a good confluence and a good entry point, a very accurate entry point. I'm actually going to show you some examples in which we literally tap the fair value gap and then we carry on like plummeting or in continuation. So yeah, pretty much that's a bearish fair value gap. Bullish fair value gap. It's not always going to look this clean, but I will show you some examples. So let's get right into it. So as you can see here, 15-minute chart EU. What do we see here? Come down right there. We have a market structure shift. Maybe you guys are familiar with what market structure shift is, but we basically have that. If you don't, then check out the market structure video I've done on this series as well. So we have a market structure shift. Then what do we have here? 1, 2, 3. Okay, sell side was delivered, buy side was delivered. But what about this area? That is a fair value gap right there. So if I zoom in, you can see the low of this candle and the high of this candle, right? 1, 2, 3. Fair value gap, and look what happens. We come into it and it acts like a resistance or whatever you want to call it. But basically, we end up respecting it, wicking off it as well, showing that, there is selling pressure. We're on the right side of the market, all of that. And then we just plummet. And there's so many examples of this happening in price. And this is for entries, right? On the daily time frame, if you look at fair value gaps, it can be like, it can help you with your daily buys, for example. So if we're like on daily, let me get to somewhere near, where are we right now? We're here. So as you can see, there's a fair value gap right there. So, you could form your daily buy saying that once we tap into this, then we could potentially see a continuation. Also this 1, 2, 3. So here's another gap. And look, we're respecting that. 2 days have gone where we're going down and pushing back up. What is that showing me? That is showing me that the next area of liquidity to target is right there. And we are bullish. So all in line with the daily buys. There was a chance to play a pullback, but we'll get into that later. But pretty much that is fair value gaps in a nutshell. Your homework for today is to actually go into the charts and just mark out these fair value gaps, take screenshots and everything, and just, see how price is reacting to it in, intra-session, or just go back in time on the charts, FX replay, all of those things. Just look it up and mark out your fair value gaps, and don't use an indicator. I see a lot of people using indicators. The more you actually draw it out and, see it working and all of that stuff, the more you get confident in drawing it. And honestly, I'll be honest, after a week of literally drawing these fair value gaps out every single day, it'll be ingrained in your head. It'll be second nature. Like, I don't need an indicator to tell me whether it's a fair value gap. It's literally like second nature. I can literally spot one, boom, fair value gap. And sometimes the thing is, they're so small that you have to like really like zoom in to see a fair value gap. But the more you stay on the charts, the more chart time you have, chart experience, everything becomes second nature. You see the market in a different way, and it just goes on from there. So trust me, I've been there where I was using indicators and all of that, but it doesn't really help. You want to be more depend on yourself rather than an indicator. But pretty much that is fair value gaps. Test it out for yourself. Hopefully this explanation was good, and I will see you next week for the next episode of Zero to Funded. And pretty much that's it. I will see you next week, and take care. Happy trading.